Welcome to another riveting edition of Risk and Return. I'm Charlie Gasparino from Fox News and the New York Post. I'm with my partner, Bob Sloan, the lead partner at S3 Partners, the only place for data on the markets that you should be going to. And one reason is because if you watch us, you make a lot of money based on his data that we provide every week. Full disclosure, I am dressed appropriately. I got an S3, vest on, flannel. What do you call these things?
Little vest, trader vest.
I got one.
Yeah.
But I am on vacation here in beautiful Madrid, Spain.
Charlie, welcome from Spain. Great to see you. And I gotta just tell everyone that listens in. And first of all, our audience is growing leaps and bounds.
Yeah.
Almost 25% growth month over month. And we don't even do the stuff that most other people do, which is, click one and then subscribe. We don't bother with that just yet. We're building an audience, building trust, building integrity. I got to tell you, if you want to know what it is to work, you just follow my man, Charlie Gasparino. This guy puts the hours and he puts the miles in, and there's no substitute for doing the work. Charlie, even on vacation, thank you for joining and inconvenience yourself and your wife. So please, apologies for
it's not an inconvenience doing God's work, and that's giving actionable information to the trading community. Bob, take it away.
So we want to start with a request from our folks out in Hong Kong. Now, this is interesting because the region is actually percolating with a lot of really interesting isolated ideas and isolated money-making opportunities. And one of them is a little known semiconductor stock. It's called Mosel Vitelic. And these things happened last week. We talked about Dongfang last week. These rallies without rationale, right?
Right.
And so there's just a lot of short covering. There's a lot of crowding pressure in the stock, and it's an interesting stock. It's a mid cap, 1.6 billion market cap stock. It's a semiconductor stock, very relatively quiet, Taiwanese semiconductor stock, but it rallied 60% in the last 5 sessions, and it did so without a real clear catalyst. So, why does it matter? Well, we're seeing more and more of this. We're seeing unexplainable melt-ups in the marketplace. And they're happening globally. It's not just happening here in the US. This is one of the reasons we wanted to start the show with this. And so what we're seeing is that, the melt-ups are being amplified by the 10% limit rule in Taiwan, but the short interest tripled during the rally before then collapsing. And it reflected aggressive short covering, right? So borrow rates short to about 10%, meaning it costs you just about, call it 30 basis points a day in return to borrow the stock. It's pretty amazing. And then our squeeze risk, if you had been paying attention, we were flagging this weeks before this happened. We could see that the amount of money that was being lost, the price action, the borrow cost was all rising in one direction. People were losing money, became very expensive, and we flagged it at about a 70. And what happens? Boom, the stock is going crazy. The trading volume is surged by about 40 times average, 40 times. Jeez. So when you said, hey, we have the best data, if this was on your radar and you were paying attention, it was a volatile situation where you could have gotten in and out, or there was a 1-week opportunity. You could have put this on your watch list, saw the action, and participated. So that we thought that was
your research called this early, correct?
Weeks. And this is the thing, a lot of this is the confusion chart. It's a great point. So much of today, the information is Googleable, it's AIable, it's everythingable, except that the pipes of financial data move very slowly. It is in direct contrast with the way we can retrieve information. And our data fills the gap between what is retrievable and what is actually happening in the financial system. There's a huge bid-ask in the time. So we put out this daily number. If you were watching this, you would have seen this signal come out weeks before. Weeks. So
And
we
you got to get and you got to subscribe to your research to get this.
That's right. You have to describe our data. And by the way, we put out this research when we see something interesting. We put it out almost daily. Matter of fact, we do put it out daily. And so that's the point: is that we confuse the speed of the transaction, that you can do that in literally a nanosecond. The speed of
Right.
retrievable information, you can do that in a nanosecond, with how actual financial data comes together. That is still glacial, and that's what makes S3 so valuable. It's
It
why
is.
pay
It
attention.
is. It is. You know, it takes weeks for this stuff sometimes to filter in. I mean, it's getting shorter. Or, you know, obviously, I'm you know, on this this is more esoteric stuff. This isn't like an earnings report. I mean, this is stuff
Correct.
that's a little more detailed. It's in the weeds, but it's clear if you're a trader out there looking for that edge, you know, you everything else has been arbitraged except for the S3 data, the way I
Pretty
look
much.
at it.
Pretty
And
much.
pretty much, and I'm not just saying that because, you know, we do this. It's so obvious. I mean, it is what it is. You know, maybe someone will build a better mousetrap, but good luck to that because it's not happening any in this century.
Well, we have a
Uh,
deep moat. We have a deep moat
right,
around our business, and the deep moat is that we are connected to everything, everybody, everywhere. We're connected to every single exchange, every single regulator, every single bank.
right. You know them all, and you
We
know
got
them
them
all
all.
personally. Hey, you know, one thing you said was the 10% limit. I want you to unpack that a little bit because that seems to be
Sure.
key to this trade.
So there's a limit on some stock exchanges around the world, and there is in like futures. You have 3% limit up. There's a limit up.
You can't own or hold more than 3% or
Well, no,
10% or
the
whatever.
stock can only rise a certain amount every day, and then
Okay, gotcha.
it's closed down. So
Okay.
it gives the exchanges, when most of the exchanges, are a self-regulatory organization, or SRO. It gives the exchange a chance to do its own inquiry. Hey, what the heck is happening here? Talk to the company. They
Does
talk.
that is that on the New York and the Nasdaq as well?
Yeah. I mean, the exchange can come in and close the stock down anytime it wants.
They can, but they don't have a specific limit. I mean, it's like they have a limit where they look at it, I'm sure, but they don't close it down all the time, so to
No,
speak.
no, that's a rare event. Like, if you see
Yeah,
things drop 20%, sometimes they'll suspend trading for in a couple hours
right.
or a day or so because they want to know what the hell is going on. So yes, those limits happen. Charlie, you got me on what the exact limit is per exchange around the world.
Not easy. That's not easy.
It's not
That's
something I'm going to look at every single day, but they do exist. Let's talk about, we've talked about battleground stocks, and here's one that's interesting because you and I have talked a lot about how speculation has become part of American life and actually global life. And I thought you made a great comment last week. You said, hey, football betting, sports betting, call sheet, polymarket, betting on, I don't know how many times,
everything.
Cuomo's going to
And
do a
anchor.
certain speech on a certain day or whatever it is.
Right,
You can bet on anything. It's really become part of our lives. Speculation has become part of our lives. Why? To stay ahead of inflation. And I thought that was a really great comment last week because I think it's really true. People are
Well,
speculating
the
for that
mass
money.
the masses are doing it through Kalshi. They're doing it through stocks to a certain extent,
Yeah.
through meme stocks. Sophisticated people can do it. You know, if you watch us, you could do it. You could do it through the regular markets with sophisticated data. So, you know, everybody needs to stay ahead of inflation. I don't encourage speculation, but there is an inflation, trade here that you got to be aware of.
So, one of the stocks we're watching very carefully is MGM, right? Which we all know is a resort, but it also operates casinos, sports betting, etc. And it is probably the poster child for hedge fund battleground stock in 2025. Hedge fund longs have been rising while shorts have hit 12% of float, which is a pretty big number. And that's driving a lot of volatility and positioning risk. And it's really interesting because the tape in the stock has been really driven by more positioning than the fundamentals of the stock. So what we've seen is that fundamentals, quants, and multi-managers have added exposure, even as short sellers have surged to 12% of the float. So you've got a real battle between hedge fund active longs and short sellers in the stock. And what's
But these
happened?
guys are these guys have fallen off my screen. Is it anything fundamental going on? Are they expanding in China or something? Or
We're not really, that's not what we're looking at. We're not really looking at the analyst story, but the result of the analyst story is that you have a binary bet on this stock. And what's happened is that the this is our long short ratio, which is the number of active longs divided by the number of active shorts, basically the short interest. It's compressed by about 40%, right? And that's a sign of crowding and volatility. So we think that you've seen a really interesting increase in active long interest year to date, about 65 million shares. And then you've seen short interest, up a lot. And that long short ratio is nearing, about 2. And, it's compressing. So watch MGM for volatility. It's a really interesting stock. There'll be a lot of volatility because the positioning tells you that people are either going to get in or get out. That marginal dollar will swing the stock one way or the other.
the CEO was originally on CNBC. I just did a quick search. The analyst story on this is that it's reacting to potential slowdown in travel because of potential recession. So that makes a lot of sense. I mean,
Sure.
that's not absurd.
It's not
Um,
absurd, and I think that tells you why people are so binary on the stock, right? It's a broader representation of how people feel about the economy, which is,
right.
hey, if there's a slowdown, shorts increase, people gamble less, they rent restrooms, they do all the things less, and then the longs are like, no, we don't care if the government shuts down, we don't care if we think that price cuts are priced in, AI comes in, more productivity, more growth, we're hanging in there.
Yeah, no, I know that is clearly what the market is signaling, and we're seeing it through the stock, and you're seeing the battleground. That's a good battleground. We should come back to that next week, I think, just to
We
make
will.
see where the battleground stands on that.
We will.
Um,
Our last one is Lemonade, which is a 1-to-1 long to short ratio battleground stock. Crowding is elevated now. For Lemonade is a digital insurance company, and it is an absolute textbook battleground stock.
I don't know how do they come up with the name? That's what I want to know.
Lemonade, I don't know.
Oh, man.
Well, one thing, they didn't ask Cracker Barrel.
Yeah, good point.
Good point, right? They didn't ask Cracker Barrel. So longs and shorts are basically almost matched in this stock.
There you go.
Right. And despite the stock is up 43% this year, but short interest remains about 30% of the float. And Lemonade is the number one short in US financials by short interest as a percentage of float. So short interest, if you look at the positioning, is 17.4 million shares in short interest, about 29% of the float. It's at a 52-week high, the short interest. And then if you look at active long positions, about 897 million versus short notional of about 928 million, which is about 1%, 1.0. So this stock, watch this over the next 6 to 90 days. If you see that 0.97 ratio dip to 9.0, the short sellers are probably going to win. If you see 0.97 going to 1.05, 110, longs are going to win. And this will play out over the next 30, 60, 90 days.
Yeah, I mean, the fundamental thing is a debate over, I mean, kind of like a debate over the economy. What we're talking about, whether the Fed interest rate cuts are net positive or signaling that we have a slowdown, and how that impacts, the economic stability and, their, I guess, loan loss ratios and things of that nature. So it's playing out in this stock. One of the things interesting, like a JP Morgan, for example, is a bellwether in many ways, financial, but Lemonade is not. You know what I'm
No,
saying? And JP Morgan has buffers, right? It has
everything.
diversified businesses. So a company like this will react more, sort of, I guess, will be more volatile against the economic background drop that we're describing. Is that a correct assessment?
I think that's totally right. And I think that's why we brought out some of these stocks that are trying to reflect the battle on the overall economy. Are we softening or are we getting more productive and growing? And that's really the issue of the day. And even when the government shuts down, like it did, the market takes it in stride, and the market is very, very, very buoyant right now. It is taking bad news, digesting that bad news, and finding up a way to make it good news. And that is really incredible, right? So, inflation comes out, market comes up because we have growth, right? The market's weakening. That should be bad for the stock market. No, we're going to rally in the rates. Rates, built in. We see people laying off workers. They're getting more efficient, more productive. We're going to buy it. So the market just seems to want to find a reason to go up.
There's this is a perfect transition to the government shutdown before we get into some of my headlines, and I won't have too many of them. But George Soros wrote a great book called, I think it's called The Age of Turbulence, Reading the Mind of the Markets, and he talks about herd mentality.
Yep.
And the herd here is so bullish that everything gets sort of seen through the prism of positive. Even like, naysayers like me and Jim Chanos and people like that say, "Oh, wait a second, we could have latent inflation. We're still way above the target. We have slowdowns. Obviously, there's somewhat of an economic slowdown. AI is taking jobs." But the herd is saying, just ignore all that, because here's what, and markets do price in the future as opposed to the current.
Yep.
It's really, and maybe the herd is right. I don't know.
Well, I'll tell you one thing we've seen from our customer base. Excuse me. One thing we've seen from our customer base is, for a long time, no one was asking us, what is retail doing? What's retail doing? And the reason why the Battleground stocks are so interesting, and the way we've parsed the data, so you understand the active long. If you look at what's missing in the equation, you can see how much retail is actually participating in these stocks. So if it's not an ETF and it's not an index, and if we've classified the investor correctly, then what's left over is retail. And so a lot of big institutional players are seeing retail really lean into this marketplace. They want to know, and they want to be able to understand and calculate the amount of that participation. So, to your point, and I think to our point earlier about everyone now, it's the speculation economy. Institutional investors are feeling it, and they're feeling it as they position around stocks like MGM, like LMND, and like other, I would say, explosive stocks around the globe.
Yeah, no doubt. And retail, this is why retail needs to be up its game a little bit, not just follow the herd, but try to follow some of the science here that you're providing. You know what I'm saying?
Absolutely.
And what do I mean by retail? Listen, I tried to, like, Bob's a sophisticated guy. I'm just a simple country reporter. I tried to translate some of this for you, which is why I ask stupid questions like, "Tell me about the 10% rule." You know what I'm saying?
But
So,
but did I know the answer? Kind of, sort of,
yeah,
know, right? They're not so stupid, right? Because
yeah.
asking this. So this is a word of advice for people listening in. Okay, we have built a business based on asking questions you're almost embarrassed to ask.
Right,
It's
right.
it's amazing if you have the courage and the fortitude to do that, what you'll find.
And it really is, and you learn a lot, and that's why I keep asking the questions. I want to get to my headlines before we wrap things up. And it has nothing to do with the Spanish election. Is there? If there is a Spanish election, I have no idea. Allegedly, there's a socialist running this country, and allegedly, not allegedly, maybe definitely, there's going to be a socialist running New York City. Just a couple of days ago, Bob, as you know, Eric Adams, the current mayor, dropped out of the race finally. He was polling around 9% of the race. There's tremendous pressure on the Republican, who's considerably more than 9%. I think Curtis Lee was anywhere between 12 and 15, 16%. polling, and the other two, it's is Mandami, Zohar Mandami, the socialist, some would say communist, who's way ahead, and then distant second would be Andrew Cuomo, the former governor. And you can already hear the billionaire class trying to push Curtis to drop out. As of today, and this is running on Friday, I believe. We're a couple of days away. I hate to date it, but this is important that we do. So midweek, I just spoke with Curtis or texted him. He's not dropping out. As a matter of fact, he's speaking with the New York City partnership, obviously to try to raise money and to introduce himself to them. But the pressure on him to drop is going to be hot and heavy. And I don't know if he will. I do know that, barring something dramatic, Zohran Mandami is going to be New York City mayor. And, if you're in the city, if you're a taxpayer in the city, and it's particularly anybody that makes more than, I would say, 150 grand, 200 grand a year. If you own a business, he's got a big target. Now, he can't unilaterally raise your taxes, but there's a lot of Zohran Mandamis in city and state government who can. The state government needs to approve that. You need the legislature to approve it. Who knows if Kathy Hochul, the current governor, will do it. She changes, like, she has absolutely no morals and political morals. She changes like the wind. And it's a scary situation. You can move, but still, this is still like no one really wants to. If you've been a New Yorker like Bob and I have for nearly our entire lives, I moved out of the state to move back, to learn a trade, journalism, to move back in to New York City and be a financial writer. And this is my home. I was born in the Bronx, so I've always wanted to be here. Yeah, if you can make it here, you can make it anywhere. And I'm starting to look at the sort of the risk and reward and saying it ain't worth it. It's not worth it. You can, particularly if you made it here, you can just leave.
Charlie,
Because,
can I ask you a question? This is a
yes.
serious question. This is about Mom Donnie. New Yorkers are famous for being a tough crowd. I mean, you can say too tough, right? Look at what happened in the Ryder Cup, where everybody's yelling F you to, that really wasn't in the spirit of the event, right? You're not really supposed to do that. Did it anyway, but that's New York, right? Sorry, guys. That's the way it is.
Right. Well, that was Long Island.
But so what? It's New York. What happened? Why can't we sniff out the bullshit? Because this guy's bullshit. He's bullshit.
We have a different, because the typical New Yorker is no longer a typical New Yorker. I mean, and this is a city that has gone through tremendous demographic change. There's a lot of newcomers here, people from all over the country. I'm not just talking about immigrants now, all over the country who are, very socially liberal, and they've moved in here. And they want to make it here in New York. They work in publishing. They maybe even work on Wall Street in entry level jobs. And they're saying, okay, I make 200 grand a year, which used to be a lot of money. God, if I was making that when I was a kid, I would be like living large.
Yeah.
But they can barely afford an apartment with two other people because the rents are so high. So they take that out and they say, here's a guy that's giving us free stuff. And the guy that's giving you, but what they don't realize is it's the free stuff that is caused the cost of living to go up. It's the fact that you can't build new apartments here because it's all this rent stabilization, all these crazy laws. Not even stabilization, it's rent control in many ways, and permits and this and that make it very difficult to live here. And it's hard to build new buildings, build new apartments. And because of that, the cost of living here is astronomical. And so the New Yorker that you're talking about has moved. I mentioned Nassau, Long Island, has moved to Long Island, has moved to Connecticut. And that's where New York resides. And here's the thing that people forget. There will be there's been particularly since de Blasio became mayor. A lot of this started when Bill de Blasio became mayor, and I believe that was 2014. Correct me in my math if I'm wrong. But yeah, 14, he was, no, 2016. Okay. Or did he get
No,
two
it's
terms?
2012, right? 2012.
2012. So he got two terms, right?
Right.
So there's been an exodus of people that should be paying the bills that are leaving. And all the stuff that Mondami wants to do, will cause more of that exodus. So there'll be less and less people who could pay the bills here, meaning the taxes on them grow exponentially. And it's just simple economics. There is no way around it. You can't, Mandami can't, is a, maybe a commie, but the country is, this is a country of laws, and you can move to Connecticut if you want. He can't touch you. You can move to Florida. He could try, but it's hard.
Charlie,
Jamie
I wouldn't,
Dimon,
Charlie, I wouldn't send that guy downstairs to get an ice cream by himself.
I know,
Honestly.
I'm with you. But, Jamie Dimon and all these people, if this guy gets elected, are going to come under tremendous pressure to maybe move out. And I know I just drove by the other day his beautiful new headquarters on 45th Street and Park Avenue, and it is beautiful. But I can't tell you how many billions he sunk into that thing. But suppose none of his bankers want to work here because they get like triple taxed. I mean,
Yeah.
this is very interesting with these Wall Street guys. They kind of they're very cavalier about this Mondami person. They're not saying anything. They think they can work with him, but you can't. I mean, it's like, could you really work with you know with Joseph Stalin back in the day? No, you know what I'm
Remember
saying?
our good friend, and we had him on as our very first guest, was Jack Devine, the former
Yes,
worldwide head of operations for the CIA. And he gave us some great advice. He said, when people like Mondani speak, you have to listen and take them seriously.
I agree.
And we're not listening, and we're not
It's
taking
like
them seriously. It's it's
It's like
it's crazy.
it reminds you're so right, Bob. It reminds me of the press reaction because I'm a little bit of a history buff to both Fidel Castro and Mao. There were people writing about Mao that he was, a freedom fighter and he wasn't this guy, this horrible guy. And he came in and he murdered people through collectivization to enforce collectivization. He killed millions and millions of people, and so did Castro. People forget like the blood that's on his hands, and they think it's all just kumbaya. It's not to build a communist utopia, because people work for what they own, and to take it away from them, you often do it at the end of a gun. Now the difference is this is America. It's not. And I could just see this thing setting up with a huge battle with the Trump administration, withholding aid. I mean, Trump is relishing this battle. This is why I don't think he's going to get involved, and he's going to let Mondami win, just to say, I got 90% of my stuff out of state. I might have, you might see my name on buildings, but they rent my name. But my holding, and I do have holdings here, but I got most of my stuff down south, and my golf course is in Turnberry and Mar-a-Lago, and people, and it's my value of Mar-a-Lago is quadrupled, and I got all this crypto. Let it go to hell for a couple of years. I don't care. And I think that's kind of that might be the best solution to this, because the state has been moving towards Mondamiism for years. This expedites it, and it becomes now you get what you really pay for. I mean, let's get it. It's almost a puke. The market pukes and gets the bad stuff out. That's kind of what this could be, and I think that's the positive spin on those. The negative spin is going to be 4 horrible years, and who knows what comes after him, and maybe the city turns into Detroit. I mean,
You and
that's
I agree on
horrible.
a lot of things. We don't agree on this. I think 4 years of him is a
Yeah.
slide to 20 years of total irrelevance and the destruction of New York City. I hate to say that. I am born and bred New Yorker, as you are. Lived here my whole life. My parents lived here their whole lives, et cetera, et cetera, et cetera. You can't have it. You just can't. And I heard you, respect you, love,
There's a
but
great
that's just, I just think it's crazy.
Bob. There's a great scene in War and Peace, Tolstoy's classic, where the great General Kazukov is sitting there, and all these generals, and Napoleon is advancing, and he's heading towards Moscow. And Kazukov is falling asleep while everybody's like, "We can't let him take Moscow. We can't." And he's like falling asleep. He's got his head over his head. And he wakes up and he goes, "Let him take Moscow. We're going to win, because the Russian winter is going to come,
Yeah.
and he's going to be stuck here. And then we make our move. Let's pull back." And that's what happened. And that's what the Russian troops did. And as you know, Napoleon was humiliated, was forced out. And then his final humiliation was known as Waterloo. But Bob, at some point, the sort of there's a greater force that can't stop the state from turning to Mondami because we have one party rule in this state.
Yep.
When you have one party rule, it is the activists of that party that are going to push it in a certain direction and then are going to take it in that direction. Mondami is an inevitable outcome of that. Andrew Cuomo tried to make the case to the New York Post editorial board. I know this because obviously I work for the Post, and he tried to say, listen, you keep attacking me for bail reform. You keep attacking me for this, for that. I couldn't. I was trying to cut deals with the progressive wing of my party so it wouldn't be any worse. Now, what he probably should have done is take a stand and say, "Buck stops here. I'm not giving, and we're not." And maybe less people would have left the state.
Yep.
But at this point right now, we are at a point where it's inevitable that we're going to have Mandami now, and whether Andrew Cuomo can turn this around and Curtis Lewa leaves, this is where the state is, and you almost got to let the Russian winter set in to prove to, and maybe it doesn't take 20 years, maybe it's like 4 years of hell, and people say enough because the guy's an imbecile, obviously. So I would just say that's my argument, and I'm sticking with it. I'm not gonna say it's gonna be fun for 4 years. I'm going to decamp to Connecticut. Unfortunately, unfortunately, it's very nice in Connecticut,
It is
where we
very
have
nice.
socialism of a less virulent variety. But we can, but listen, by the time this podcast runs, Curtis Lee may bow out. Although based on the text I just got from him, I don't think so. A
What do you
couple other
think he
stories.
want? What do you think he wants? We
You
had him on
know,
the
he wants
show, and he was adamant. I'm in it. So I don't know.
he wants to be mayor. He's not a guy that's motivated by money,
Yeah, that's
but
true.
everybody is to a certain extent. He is getting offers like, listen, drop out and you can have a seat here and my real estate company, and you'll never have to work a day in
Right.
your life. I mean, that's happening. Um, and by the way, then Andrew Cuomo has to win. I like Andrew. I mean, he's got moderate to conservative sensibilities,
Yeah.
I believe, but he doesn't articulate it, and he caves a lot. So, he's a baffling guy. But anyway, that's not for me to decide. Let me get you to two quick stories before we wrap this thing up.
Yep.
Number one, a friend of mine, and I think a friend of yours, Macon Delarim. You know him, right? He
Kind of, sort of.
long time. Yeah, you met him through Jay Clayton. He's a long time antitrust lawyer. He was Trump's DOJ antitrust chief. He has now joined Paramount and Skydance, and obviously it's to facilitate a major deal. And the deal everybody talks about is him buying Warner Brothers Discovery. As we've all leaked, as it all been leaked to all of us, is no secret. This is over a month ago.
And the shorts are out of
David,
that stock like crazy, so they believe it too.
they believe it too. Okay, but here's the thing: we're a month in from the announcement that David Ellison, the head of Skydance, and recently Paramount. Remember, he just bought Paramount for 8 billion, but it's like a rounding error for him. David Ellison is the son of Larry Ellison, Oracle co-founder, who's the second richest man in the world, worth around $350 billion. I don't know what the latest says, but last time I looked, it was in that area. So he can obviously afford eight, and another. This deal would be another 60 billion. If you notice, they haven't made the bid, and one of the reasons why they haven't made the bid is because David Zaslav, who runs Warner Bros. Discovery, pretty smart guy, shrewd guy. I've known him for years. Worked with him over at NBC Universal. He's shopping this thing, and he's saying, "Dude, you want to come at me? You better come with a big price." They don't want to overpay. They're trying to figure out a way to do it. Macon is there to help make them do it, from what I understand. And one way I think he's going to try to do this is say, David Ellison, David Zaslav, you're shopping to Netflix. Going to be hard to have Trump green light the number three and the combination of the number three and number one streaming service. Warner Bros. Discovery has been doing very well lately under Zaslav. Decent hit movies. They've fixed their studio. Their streaming service, HBO Max, is doing very
Very
well. It's
well.
actually making money. To combine Netflix, which is the number one streamer, with the number three is going to be a pretty
Mm,
heavy lift from
right.
a regulatory. Now, at least that's the argument he's going to make. Amazon has its own issues with antitrust, and I know it, and it has to do with the FTC, and they also own a studio. I believe they bought one of the major studios. They bought one of the major studios a couple of years ago. Name escapes me, but you're merging the Warner Brothers studio with their existing studio. That could be an issue. So he's going to make the case that, if you look at this from a regulatory standpoint, the cleanest deal is ours. The rest of them are, rolls of the dice. So that's what Macon's brought on. Again, this thing, for all I know, they're going to bid on this thing any minute now. So
Mm.
as we go to press, as we go live, this thing could be bid on or maybe not. There is word that Macon's going to try to get the John Malone, the telecom pioneer, I guess you could say,
Yeah. Kingpin.
to talk to Kingpin, to talk to Zasloff. He's an investor in his company. He's also like a mentor to Zaz. So after the bid is announced, that's when there could be the convincing, unless they're doing the convincing right now, and Zaz is ready to bite, and then they announce the bid and the deal all at once. But anyway, keep an eye on this. This is kind of where my Macon was brought on, and he was brought on late last week. The Post broke the exclusive. I broke it on my Twitter page as well. So that. Just keep an eye on that. The other thing is TikTok, which is fascinating. They finally got a deal, like a somewhat deal. Like Xi is going to license President Xi Jinping, and Trump worked this out mano a mano, which is kind of interesting for this this app that kids are into, dance videos and other stuff. It's very controversial. Republicans and Democrats believe it's used for spyware for the communist Chinese. It's a Chinese company that owns it, or if it's not even spyware, it's both spyware and polluting American minds with anti-American propaganda. Trump wanted to ban it back in 2020. Remember when he was running in 2020? He did a 180 this time because he believes it helped him win over youth voters, because his operations flooded TikTok with the late great Charlie Kirk did it as well.
Yep.
Flooded with pro-Trump, pro-MAGA messaging, which helped increase voter turnout and votes for Trump on young Americans who are primarily the user base of TikTok. They have a deal now to prevent it from being banned. Remember, there was a law passed that it should be banned if there's any connection to the Chinese. Now, here's a little wrinkle in this. It can't be controlled by the Chinese. They can own a stake. They're going to own 19.9. The sort of the sort of fly in the ointment is the algorithm. The algorithm is going to be TikTok's existing algorithm that the Chinese are going to lease to us. Again, Larry Ellison's involved in Oracle. It's going to be leased to him and his cloud, where he somehow manipulates it to take out all the bad stuff. That leasing arrangement is why I believe why a lot of people believe there won't be an IPO. Here's why. Under the ban law, it says that if you're a private company or a private investor and you help the Chinese, or help TikTok circumvent the ban law, which means no Chinese control, you're on the hook for gazillions of dollars in damages. Um, that's enforced by the president. He has interpretive powers here. So President Trump right now is saying, man, this is fine. I don't care. But suppose President Gavin Newsom comes in and goes, no, no, no. We're leasing the Chinese app. They still have some control over this thing. All you investors are on the hook. So it's not just the institutional investors that are on the hook. It's retail if they IPO'd. And the disclosure of that huge liability, which is in the TikTok ban law, we're talking billions, is going to probably make it impossible to sell through retail
Public markets.
investors.
Yeah. Right.
So,
Interesting.
or enter public markets. So that's where that is. That's one of the theories, by the way. They gave it a valuation of 13 billion, which seemed low, which means everybody thought maybe they would do an IPO. Right? They value it at 13. You sell, they bid up the stock, blah blah blah. But this whole thing with control over the app could be, and the fact that the Chinese may not control it, but it's still their app, and who knows if you can fix it that much. This is beyond me. You know what I'm saying?
Well,
But again,
we're gonna watch that
yes,
carefully. We're gonna
yes,
watch.
it's interpretive, and it's interpretive powers of the president. So if you have a different president, you can have a different interpretation. That's it for me, Bob. Do you have anything else you want to add to this glorious
Have a,
day? And
have a great time. Thank you for doing the show this week.
oh, my
And
pleasure.
we'll see you next week.
Yeah. Again, this is Charlie Gasparino in Madrid, Spain. I'm working on my Spanish, trying to remember what it was like to speak Spanish in 8th grade. Signing off, another riveting edition of Risk and Return. See you next week.
See you next week.